Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the market is holding steady. We haven't done much. We are still around that 21,360 thereabouts. But at least from the bottom of the day, we have made a sizable recovery. And that's something to cheer. Ditto can be said about the Bank Nifty as well. It's now down 170 points. At one point of time, that number was almost 200 points. So from there, we have seen some gains. The broader markets have been faring much better today, especially the mid-cap index, which is actually managing to hold out quite well. Within the various sectors, have to highlight metals because that is one space which is shining away in the trading session. Nalco, Hindustan Copper, SAIL, Hindalco, these are some of the names. Of course, the news coming in from China about the RRR ratio being adjusted a bit, so that's given a bit of a fillip to the entire metals basket. And then overall, if you look at the Hang Seng market as well right now, that's trading with a gain of almost 3.5–4%, and the other Asian markets are also doing okay. In fact, if you look at the European markets as well, they have opened up in the green, almost 0.5% higher. So at least the global setup is a bit positive, but back home it's all about earnings, and we have another one on the screen.
Yes, we do, Indian oil, but I think, just want to spend some time more on the market. While we've seen a 200-point recovery from the session lows, you got to doff your hat because that recovery is coming in from, everything ex-banks. Banks have not participated in the recovery. So blue chips like an ICICI Bank are still lower by almost about 3%. Axis, of course, has taken a tumble after its earnings. So even though the Nifty Bank has recovered from the session lows, but even then, the recovery has come in bereft of a move within the banking pack. Even Kotak is lying absolutely flat as we speak right now. SBI, of course, has scaled up, as has been the case with an HDFC Bank. But that said, like Anisha flagged off, metals it is. So all the way, they're the ones which are holding out. Look at names like Bharti. They're sitting on a gain of about 2.25%. And I think this was one of the standalone movers yesterday as well. There's, of course, DRL, which is going very strong. Another 4% of a dash today. Cipla, remember, was up over 7% in trade yesterday, even in that carnage that was on in the market. Today, of course, it's a lot more tempered, although it spent the better part of today's trading session well in the green. In the last 7 trading sessions alone, it's put on a show of about almost 7.5%. And then, of course, there is L&T, ITC, Nestle, M&M, they're all participating in today's market. What continues to be beleaguered, other than the private banking names, also IDFC, must add that to the list of Axis as well as ICICI Bank. Oberoi Realty, just look out for what that stock as well is doing right now. For a second consecutive day, that's sharply lower, still down about almost 5%. And their commentary has really not gone down well with the street. While of course the stock has seen the biggest single weekly decline in about almost 3 odd months. The fact that they're now hinting at a delay in their projects. Their Thane project, they're saying that they've already pushed the launch to September of this year. Sky City 360 West, which are some of the other premium, projects in the MMR region. They're saying that they are seeing a moderation in the sales run rate as well. And they've had another weak response to their Kolshet project as well. So that's the commentary coming in from Oberoi Realty, rubbed off on the rest of the realty majors as well, along with the weak market mood in any case. But I want to see what the other realty majors as well are up to today. Remember, DLF is due to report its numbers, and that's going to be quite critical. Very, very tempered on DLF still. Metals, of course, are in focus, like we've been flagging out. China has cut their reserve required ratio by about almost 0.5%, and you're seeing a big move come in all across both China as well as Hong Kong markets. But Indus Towers, that's the other one which is in focus, and we're learning from our sources that 2 private equity investors are offloading their stake in Indus Towers. Let me take it across to Priyanka Anna and then get in more details. Priyanka?
Yes, Aisha, of course, we're learning from reliable sources that 2 private equity investors are likely to offload their stake in Indus Tower, and blocks, which is estimated to be $500 million, is likely to happen very soon. The 2 investors which have been invested in Indus Tower from quite some time, which are Silverview Portfolio, formerly KKR Asia 2 portfolio, which holds 4.85% stake in Indus Tower, is one of them, and the second one is Canada Pension Plan Investment, which holds around about 2%, precisely 2.19% stake in Indus Tower. They both are likely to offload their stake, and They have been invested in Indus Tower since 2017, earlier when it was Bharti Infratel and later it got merged into Indus Tower. That time the price at which they bought was 325 rupees per share, so they both are likely to offload it very soon. And from our reliable sources, we're learning that Bharti Airtel is likely to pick these blocks. Bharti Airtel, which is currently the significant shareholder, also holds around about 48%, precisely 47.95% stake in Indus Tower, is likely to has already expressed their keenness in buying the stake, and probably to watch out these blocks would be likely this week itself. Silverview and Canada Pension, both we have written separately for the comments, but we are yet to receive a comment from them, but these blocks are yet to be watched.
We'll watch out for that. So Indus Towers in focus on account of the block deal which is expected. But let me take it across to Naresh as well and get a sense in terms of these big movers that we are seeing today. But before that, Motilal Oswal's numbers just came through and I think there's a big sharp spike on that one. Let's pull up that stock and see what kind of reaction that we are seeing on the stock of Motilal Oswal. It's a vertical move at that, a very sharp surge as far as Motilal Oswal stock is concerned, and IOC too is reacting positively to its earnings. Let's discuss that a bit more actually, Naresh. Indus Towers, the story that we talked about, Motilal Oswal, that sharp spike, and what's happening with a couple of other result reactions as well, Indus Towers included.
So Motilal Oswal is something which I've been recommending for quite some time now, and the whole sector as such has done really well. Motilal was a relative laggard in terms of the price action. The stock had topped out around 1600 to 1700 levels, 1600 levels back in 2017. And now finally the stock is above that. So it's a fresh breakout into new all-time highs. The trend remains positive. Now, given that it's already moved up 15-20% today, time to keep a trailing stop loss and ride on to this one. Same with Indus Towers. That's an interesting case because the stock for the longest time has been around this 230 mark, which has been a resistance. If we go back to the history, the stock was last at 230 even in 2014. In the short term, 210 was a resistance which got taken out. Then 230 was the recent top which has been taken out. So out here looks like a major long-term trend change. And it could slowly and steadily reclaim those 300 prices which it was back in 2021.
Okay, point taken. So those are some of the views on the stocks which are buzzing around in the trading session. But looking at some more buzzers on the downside, Ujjivan Financial has taken a sharp knock, down about 8%. Karnataka Bank is coming under pressure. And the curious case of Max Healthcare, because yesterday that stock had seen a spike of 6 to 7%, right now completely retracing that move. Kunal, Ujjivan, Karnataka, Max Healthcare, you track any of these?
Yeah, I do track all three of them. I think Ujjivan Small Finance, I think is a stock which has done reasonably well, but I think more because of the pressure which is happening across the financial services name, that stock is also going through a correction. I would still believe that broadly 48 to 50 is a very good support level for the stock. In case if it dips down to those points, it could become a very good entry point. Karnataka Bank also, on the other hand, I think after a very strong up move in the first couple of weeks of 2024, when the stock moved up, I think till 260, 265 or 270 odd levels. I think from there the stock has gone through a correction, but still a very attractive chart when we look at the longer term time scale. So maybe these kind of corrections could be a good opportunity to try and scale into these names. Max Healthcare also, on the other hand, I think it's an excellent chart. The stock yesterday made a fresh 52-week high as well as a multi-week, multi-swing high for itself. So looks attractive, and I think such kind of tips should be bought into.
Coming in on some of these names. There is, of course, some source-based information coming in on a block in Poonawalla Financials as well, where it seems like Adar Poonawalla may have actually bought 40 lakh shares. But Kunal, what's it looking like for the real estate pack, especially led by the weakness in Oberoi Realty?
I think it's just a wave of profit booking, Aisha. I don't expect this to be a major trend reversal. Real estate for the last 12 months was up, I think, 4 or 5 months as one of the best performing sectors. So it's bound to be that, and especially in the last, I think, 3 months of move, the sector was up some 45 or 50% plus, if I'm not wrong. And most of the constituents were up some, 30%, 50%, 70% at large. So when you see such kind of a strong upward move into these names, and when the market gets into a bit of a risk-off phase, it's bound to be that many of these sectors which have done exceptionally well, there's bound to be some sort of a profit booking wave. So I'm not reading too much into the correction into the real estate stocks, just waiting for many of these stocks to come back to their respective 50-day moving averages. I think if that happens, maybe a correction of another 8%, 10% broadly for these stocks, and I think that could be a good re-entry point for someone who's missed out on the trade, or maybe to try and accumulate further.
Okay, point taken. So that's about the real estate stocks, but it's all about the banking space and the kind of tumble that we have seen in the private banking, sector as a whole. Gaurav is joining us to talk to us about the key read-through from the sector and what exactly is making the street nervous about the banking sector. Gaurav, take it away.
When we talk about banking sector, we have seen that the banks are underperforming for the last few days. And if we specifically look for the performance post results, they are very poor for the banks. And if we have to if we have to bring down some pointers from the bank's results, the first one would be the deposit. Fight for the deposit is going to intensify, and that is what we have seen in the bank's results. So if we look at the deposit growth for the bank rates, let's say if we talk about the HDFC Bank, it was only at 1.9% on a quarter-on-quarter basis, which kind of triggered a negative sentiment for the investors on HDFC Bank. Let's also not forget that HDFC Bank's LDR ratio was at 110%, which gives another pressure point for the bank, because the liquidity is somewhere going to be compromised for the bank, and this will impact the loan growth, and that is why we have seen a big fall coming up in HDFC Bank. If we talk about loan growth again, we have also commentary coming up from the bank like Axis Bank, where they believe that the advances growth is going to converge with the deposit growth, which will be somewhere in the range of 13%, and that kind of gives a negative commentary that the trajectory for the growth may slow down in the going ahead, and that is why we saw negative sentiments building up on Axis Bank as well. Let's also not forget that the CASA is falling for most of the banks. Almost all the private big banks have reported low CASA for this quarter. Street is also worried that the NIMs, the best time for the NIMs is now behind us, and we may see some kind of decline in the NIMs. Now, although this is in line with what the street is expecting, but some kind of stress coming up in the banks, where we may see some kind of we may see NIMs declining more than the expectations. That is where we are seeing the stress building up for the banks. Lastly, let's not also forget that this is not only about the consensus estimates, because if you look at the Indus Bank, the estimates, the results were in line with what the estimates were. But in this quarter, Indus Bank reported gross slippages which were 500 crores higher than the earlier quarter, and we also saw the contingent provisions were higher at 220 crore rupees. These were used in this quarter. So not only the estimates, but also asset quality is going to be in focus in this result season, and that is what is playing out, and that is why we are seeing the banks going down. But lastly, if we look at the consensus, if we talk about Axis Bank, we still have an upside of 19.6% if we compare it with the average target price from the consensus. If we look at Axis Bank, we have upside potential of 18.8%. Indus Bank shows upside potential of 26%. Kotak Mahindra Bank shows upside potential of almost 15.9%, and lastly, HDFC Bank shows upside potential of 35.1%. That means we may see that this reaction which is coming up from the market may be a little over exaggerated, and we may see some kind of rebound coming up for these stocks in the coming days.
Okay, yes, so those are the worries that is actually niggling the entire banking space for now. Fight for deposit is going to intensify. No secret that the NIMs are expected to be under pressure given the cost of funds are likely to rise, and CASA too has been a key monitorable in this earnings season. HDFC Bank continues to be under pressure, was at 52-week lows, and for now there hasn't been a meaningful recovery in the stock today. At least today though, there is a 1.5% move that we are seeing on HDFC Bank. In fact, Naresh, on HDFC Bank itself, do you see a reversal in place and a bottom made, or we shouldn't read too much into today's move that we are seeing?
The stock had actually opened gap down in the pre-open, and we had seen large volumes around the 1380 mark, and we've seen a strong recovery from those levels. So a classical indication as a short-term bottom is in place. And if you look at HDFC Bank, look at it from the perspective that the stock had made a top of around 1300 back in pre-COVID. So it's one of the only stocks from the banking space which is less than 10% higher than the pre-COVID prices. And whereas the Nifty, which used to be 12,000, is closer to 22,000 today. So at these prices, the risk reward is pretty interesting. Do not expect it to close below 1300, 1380 levels. Also, 1300 was the low post the merger announcement as well as the pre-merger announcement. So out here, we are into that zone from where we can reverse. The only case which we need to watch out for is when can it sustain above the 1550, 1600 mark. So for now, 1550 could be the upside in this bounce back.
We'll take a very quick break on that note, continue chatting markets on the other side, get a fundamental verse in as well. But here's Gaurav Gupta, partner and GCC industry leader for Deloitte in India, who talks about the budget expectations this time from a GCC perspective.
From a government perspective, definitely some help in terms of policy changes can help drive that growth further. Namely a few. The first one is, most of the incentives that the government was providing for new GCC setups have gone away now over time. And while the government is focusing a lot now to build up the manufacturing sector, I think the GCCs also could do with some benefits coming, especially during the early stages of setup. If the government can look at policy changes to provide some incentives for GCCs and organizations who can help drive that innovation, investment in startup ecosystem, or even creating that infrastructure and education systems and policies to be able to continuously look at what advanced skills are there, how we can bring them, how we can train more people. The third one is specifically from, again, input tax credit perspective. I think both on capital goods as well as some of the services that the GCCs consume, they're not able to leverage the input tax credits that are available to some of the other organizations or other sectors, if that can be made available to the GCCs as well. And lastly, as we see more GCCs coming in or expanding, I think there's a need to relook at how we can help grow the physical and digital infrastructure, not only in the tier 1 cities, but also in tier 2 cities.
Since we're very close to the budget, let's take it across to my colleague in the reporting team to get a sense as to what the latest expectations are as far as budget is concerned.
The upcoming union budget may have a big announcement related to railways. What we are picking up from our sources, that in a move to enhance the faster, reliable and comfortable rail journey, more sleeper-based Vande Bharat trains is likely to be announced by the government. The Finance Ministry may make an announcement of introducing around 40 to 50 sleeper-based Vande Bharat trains for the financial year 2024-25. And these around 40-50 Vande Bharat trains will be targeted for a long route journey. In addition to this, we are also picking up from our sources that the first prototype of this sleeper-based Vande Bharat train is likely to hit the tracks by March 2024. And the first route could be Jammu to Delhi. It is possible that one of the big infra project there in Jammu is near to the completion and it may be inaugurated by Prime Minister. And when this takes place, it is also a great possibility that the first prototype of a sleeper-based Vande Bharat train may be flagged off by Prime Minister Modi from Jammu. It will be running between Jammu and Delhi. The other possible route that Railways is exploring include the routes like Indore, Ahmedabad, Delhi, Prayagraj, Delhi, Chennai, and also Chennai, Bengaluru. So these are a couple of routes, but the final confirmation or the final nod has to be given by the Prime Minister office. But these are a couple of the interested routes. Now, sleeper-based Vande Bharat train capable of running at a 160 kmph speed will be having multiple high-end or advanced passenger-centric features, which will make the overall traveling experience much better. Recently, we have seen that a tender of 120 Vande Bharat sleeper-based Vande Bharat train was awarded to RVNL and Russia-based TMH, a joint consortium, and more such tenders are likely to be awarded in the coming time.
Okay, thanks so much for that, Sameer. But take a look at the market. Nifty has managed to breach the mark of 21,400. So a good rally is what we have at our hand now. And Nifty Bank has finally managed to show some green. So after seeing a low of 21,140 thereabouts during the trading session, we have seen a recovery of almost 250 points and managed to be in the green. As far as Nifty Bank is concerned, let's pull up the candlesticks if we can to see what kind of bars are there and what's actually supporting the mood right now. Okay, so Bank Nifty has again moved into the red after seeing a bit of a green during the trading session right now, but at least some green was visible on the screen. Let's see whether it continues for the rest of the half an hour or not. But let's do one thing. Let's take a quick break on the show. When we come back, we'll be joined by Mr. Jitendra Arora to talk to us about the fundamentals of the market.
Back with closing trades right here in 89. The closing trades are not looking bad. A good 180 points up in the green. We are back above the 21,400 print right now in trade. Of course, markets like Shanghai and Hong Kong are in a different trajectory altogether. Post that RRR move from the Central Bank of China, they've seen a big move coming in. But even Europe, to be fair, has started off well in the green. About 0.5% to 1% is the kind of gain that you're seeing all across. And today, much unlike yesterday, we are participating in that global move in today's session. That said, Axis, ICICI Bank, TCS, Adani Ports, they continue to sulk still in trade. And of course, names like an MRF, Delta Corp, Oberoi Realty, they as well are seeing some sharp downticks. From within the broader markets, as is the case with large caps, it's metals all across that are shining bright. Z as well has perked up about almost 8%. REC, PFC are some of the other names which are looking good. And Indus Towers as well holding up 6.5% as we speak in the green right now. But let me welcome on board our next expert and figure out where he sees the market headed from here. We've got Jitendra Arora from ICICI Prudential Life Insurance Company joining in on the show right now. Jitendra, hi, afternoon. Welcome to ET Now. Just wanted your take on what you're making the trend across the banks, because there clearly seems to be a growth slowdown and a liquidity crunch clearly. And I guess that's what's reflecting in the stock prices too.
Yes. Hi, good afternoon. As you said, that clearly, I think short-term factors are right now dominating the banking sector per se, wherein we are seeing that because of tightness in liquidity in the system, we are seeing shortage of deposit growth, which in turn is also affecting the cost of funds, and as a result, leading to some kind of NIM compression for a lot of banks, and also elevating their CD ratios. So as a result, we are seeing that banks' earnings are coming a little bit under pressure, and market has been reacting to that. Let's not forget that along with this, banking is perhaps one of the most heavily overowned sectors within the Indian market by both FIIs as well as domestic investors. So as a result, when the earnings are not being as supportive as they can be, we are seeing some kind of selling in the sector. However, if you ask me today, I think this is still one of the best sectors to own in the Indian economy, because we believe that the construct of the sector is that at least for the last private sector banks, they are likely to outperform the nominal GDP growth by anywhere between 3 to 5 percentage points on a long-term basis. And so if I'm getting this sector today at which is likely to reflect a 15% growth over a longer period of time at roughly 2 times book for almost anywhere between 15 to 17% ROE, I will happily be adding it to my portfolio.
Sure. The other thing is, of course, there's value on the table. But where is it that you see a combination of growth and value in this market? Because, pretty much all sectors out there do seem overvalued right now, or at least fairly priced.
So that's where I said that banking perhaps stands out, where we see value as well as growth. So if we are willing to overlook the next couple of quarters and start looking thereafter, we will see that the NIMs, which are compressing right now, will perhaps base out, and thereafter they will start either stabilizing or going up per se. And also the earnings growth will be back. Let's not forget that despite all the negatives, banking sector earnings are still expected to grow in double digits over next year, which if we compare to IT sector are still much better off, which has been bought over by the investors of late. So we clearly see value and growth both in the banking sector and with a lot of valuation comfort per se.
Right. I obviously, Jitendra, meant what other than banks is looking lucrative at this juncture, or is it only banks?
No, so banks are perhaps one of the sectors. Along with that, I think given that the way the consumption stocks have been beaten down over last few quarters because we've seen a slowdown in consumption, let's not forget that some of these names will have levers which will be related to distribution. So they can continue to grow in mid-teens to high teens, or at times even in 20s over next 5 to 10 years. So even though the valuation there may seem to be a bit expensive, especially given the recent slowdown in earnings, we still like those names and continue to add them, especially now.
So that's good to hear. Jitendra, hi, this is Anisha also joining in the conversation. I wanted to understand your take on real estate and building material as a space, do you think the best is behind and one shouldn't look at chasing that rally anymore?
So in terms of demand, I think we still are at a point where demand is likely to be robust, though the valuations have moved up significantly over last few quarters. And hereafter, I think how companies are able to generate cash flows will determine whether the current valuations stay or we likely to see some correction. But a short-term correction, I'll not rule out, given that the rally has been fairly sharp over last 3 months.
And also your take on the public sector entities as a whole, because last year was all about that massive re-rating and people were calling it a long-term or at least a medium-term cycle at that. Do you think that's over, or will you still bet on the public sector entities, whether banks, whether defense, railways and the other infrastructure names?
So I guess one has to be selective there, because we have seen that given that public sector was doing well, so all the public sector companies have been re-rated. There are names in financial sector within public sector now that are trading at 3.5, 4 times earnings for growth and ROE profiles, which will be perhaps similar to, if not worse than some of the large private sector banks. So clearly the valuations are getting stretched in pockets. However, there is still value in a few names, and one has to be selective as a result.
Right. Jiten, great to have you join in and share with us your thoughts on the markets. Good speaking with you.
Thank you.
Okay, that's the word coming in from Jitendra Arora from ICICI Prudential Life Insurance Company. Quick take at what the market is up to. We're still holding on, and in fact, we're now up a good 1% in trade as well, 200 points up in the green. We'll take a very quick break, come right back. We'll continue tracking markets on the other side.
Welcome back. Well, as we were pointing out, the European markets have opened with a gain of almost 0.5%. And even if you look at the US futures for now, there is a bit of a green, and green is definitely which is back on the screen for the Indian markets at the highest point of the trading session, 21,430 thereabouts. And the bank Nifty continues to toy between the red and the green. For now, I think it's still managing to hold on into a bit of a green. So that's the index for you, seeing a bit of a recovery. In fact, I think it's holding on to sizable gains at the moment from at least where it was earlier in the trading session. A lot of results also lined up for us. We, of course, is Bajaj Auto. We also have Tech Mahindra as well as Tata Steel, which will come out with earnings. And on the broader market side, the likes of DLF, etc. are well tracked, and that too will be in focus. But let me welcome Pawan Parekh on the show to talk to us about the earnings of the financial space. Pawan, the entire private banking space is seeing a complete, wash down of the numbers, if I can call it that. People are throwing in the towel. There's a very sharp cut, even for an inline set of numbers. What explains that? Because one can't say that there was a big rally in the financial names in the first case. There's no case of over ownership as well, because these stocks have always been, high on the radar of FIIs as well. What then really constitutes to this kind of fall?
So, hi Anisha, thank you for having me. I think as far as financial sector is concerned, I think before the quarter, if you see, people are expecting reasonably good growth and modest credit costs and maybe some contraction in NIMs. But getting into the results here, one thing that people have realized that one, the problem, the elephant in the room, which is CASA, is not a 1 or 2 quarter affair. It's perhaps a 2, 3, 4 quarter affair, which will keep earnings subdued for at least next, perhaps for the entire of this calendar year. And I think if you look in that perspective, if you look, if people are not able, private banks are not able to shore up CASA, then there's a possibility that growth may be curtailed. So it's a fine balance that banks have to trade between growth and NIMs, and that is what is actually keeping investors away. More so, not only in financial, but you see across the sector, typically when the leader gets hammered, which is HDFC Bank in this case, when the leader gets hammered, it's very difficult for another bank to do very well. You saw the similar thing happening in the IT sector also when the top four guys weren't delivering good results. Even the mid-sized IT guys were finding it very difficult to get good traction on the earnings. So I think that is the whole thing with the financial sector as well, wherein leaders are facing a difficult times, and there's a possibility that this could trickle down into smaller SFBs and other names also.
Right, Pawan. Good afternoon. This is Vinny joining in the conversation as well. Obviously, difficult times you're saying is going on for the private bank. You mentioned a whole host of reasons also in terms of the balance that is required. But anywhere specific that, you're finding value in terms of, in the banking space as a whole, would you now actually look at something like a PSU bank, or do you think there's still more value actually left in the private banking space?
I think considering the markets where they are, wherein stocks are flying all over the place, this is one sector where you can see value across the board. I don't see, if you look at the entire private banking space, I think the valuations are reasonable. I mean, look at the valuations that HDFC Bank used to trade for last 10 years. If growth was to rebound back to say about between 15 to 16% for next, say maybe 1 or 2 quarters down the line, I'm sure those valuations will come back to play. PSU banks, PSU banks have an advantage of a better CASA franchise, and if they are able to grow at 12-13% with an ROA of more than 1%, or maybe just light north of 1%, despite the rally, most of the banks are, I think, on forward book to value, there are between 0.8 to 1 time price to book. So if you look at the entire sector, be it private banks, be it PSU banks, or a lot of the NBFCs also, the valuations are fairly reasonable. I think the concerns is more on the earnings side. Maybe in one or two, or maybe 2 or 3 quarters, people will realize that the worst part of earnings is behind us, and maybe that is the time when investors will want to lap up onto these stocks.
Okay, point taken. Actually, I want your view on the auto stocks as well. But before that, let me take it across to Shrishti, because a couple of auto earnings is what is expected. TVS Motors will come out with its earnings, and so will Bajaj Auto. But Shrishti, begin by telling us what's expected of Bajaj Auto.
Well, yes, good set of numbers are expected from Bajaj Auto this time around, and the key reason being the push from the domestic motorcycle sales this time. A good push coming in from the festive season sales, and all in all, if we see, then the domestic sales has been up 22% sequentially. The good part, other than that, is also that the international sales that didn't also see any sort of a drawdown. It was almost a flattish kind of a growth that we have seen sequentially for Bajaj Auto, and overall the volumes were up 14% on a quarter-on-quarter basis, and even the realizations are expected to be high. Onto the number front, we are expecting a jump of 10.5% on a quarter-on-quarter basis. Revenue expected at 11,875 crores. EBITDA expected to show a jump of 8.5%, and the margins also expected to be above 19%, and 19.5% is the number that we are expecting this time. Lastly, onto the profit figure, a 32% jump is what we are expecting, and 1,961 crores for Bajaj Auto, and all eyes will be on that, because EBITDA margins is expected to expand on the back of the better scales. But apart from that, we will be watching out for the company's commentary for the domestic sales outlook for this particular year, as well as the response to the new Bajaj Chetak that the company the company launched it recently. So all eyes will be on Bajaj Auto, though the stock has seen a good run up on the back of the festive season sales as well as the buyback announcement. So let's see how the numbers pan out this time around.
Okay, so that's about Bajaj Auto. Quickly, let me run you through the expectations from Tech Mahindra as well. The numbers are expected anytime over the course of next 1 hour. It's going to be another decline from the company. Don't be surprised by that. It's the fourth or fifth quarter that the company has been reporting a decline on constant currency basis. This time, however, it might be limited to 1% versus the 2.5% that we saw last quarter. Even in terms of margins, there is not going to be a material improvement. Remember, when we started off the year, the company was talking about an exit rate of 14% on margins. Right now that is at a very dismal level of sub 5%. Maybe this time around it will improve to around 5.3, 5.5 is what we're expecting, though the profitability might show a decent jump. In terms of the revenue, while high-tech, telecom, BFSI will continue to be weak, it's Comviva which might see a bit of a ramp up, and the BPO business might also show a bit of a support. The biggest thing to watch out for is the management commentary, because this will be the first time that Mr. Joshi will be speaking as the CEO in terms of the earnings. So the entire work around that will be important in terms of what they make of the outlook going forward and the rejig that they've done in the company. But Kunal, let me toss it to you. Tech Mahindra, Tata Steel as well as DLF, all three will come out with the earnings. Any positions that you would recommend?
So I'm very bullish on the large cap IT names. I don't generally take results based trades, but I believe I think Infosys and Wipro at current levels could be a very good bet for traders. Now, of course the stocks may dip down a bit if the results for Tech Mahindra disappoint, but those would be very marginal kind of adjustments for these stocks. I would probably look out for the trend into these stocks and looking at least another 5 to 10% kind of a swing up move over the next 1 month to 2 months for many of these IT names, large cap IT stocks particularly. I also believe Tata Steel and many of the metal stocks are now looking ripe for a breakout for themselves. I was looking at the last 1 week of price patterns as well as the data in terms of the open interest, and it's skewed towards the positive for these stocks. So hopefully with the China news also, this could propel into a breakout for many of these metal stocks which have been lying low. And even the case with DLF, I would actually believe that many of these real estate stocks are going through a bit of a profit booking wave. Once that settles in, I would believe many of these real estate stocks could be very good buying opportunities.
Right. Pawan, I'm going to come to you, and let's just talk about some of these metal names, right? Obviously, in terms of news flows, do you think anything is exciting and find value in the metal space?
No, I think it's more to do with global news flows, because as long as global prices, global news flows don't settle down, I find it difficult, why these stocks will have a big run up out here. So I think it's more about global news flow. Domestic demand continues to remain reasonably strong. Companies are adding capacity. There's a reasonably good visibility as far as volumes are concerned, in my opinion. But the problem is with the spread, because both on the cost and the pricing side, they are linked to global news flows and global things, the way they pan out. And obviously, in this entire story, China plays a very important role. So I think it's very important to track global news flows. As far as we are concerned, we are generally averse of taking bets on the commodity stocks. So metals as a space, we are generally underweight on this sector.
As far as the metal space is concerned, but let me go across to Sharad, my colleague. He's joining us to talk to us about what's the latest cover on Dalal Street. Sharad, which is the sector of stock in focus today?
Yes, from the dealer rooms, what we are hearing is Rushil Decor is in focus and buying is seen in certain HNI counters. Now, it's expected that the revenue would touch 1,000 crore mark for FY24, and analysts are estimating that the revenue could triple to almost 3,000 crore over the next 3 years. Also, the company is shifting focus to exports as well, where they're targeting 500 crore export revenue potential over the next 3 years itself. And there is an increase in the capacity utilization on their Ahmedabad plant, especially for the exports. Apart from this, company recently also received a 3-star rating as an export house, and importantly, if you look at it, the non-retail HNI investors, they still have almost a 14% stake in the company. Looking at the stock itself, over the last 4 months, the stock has been largely flat and volatile, and there were significant corrections, but today HNI buying has picked up in this counter.
Okay, so that's about Rushil Decor and how the stock is looking like. But let me take some BTSC trades as well from our chartists. Nuresh, what's the buy today, sell tomorrow idea?
So first is a buy on Dr. Reddy's, which is on verge of a major breakout. We've seen good trend across the pharma pack. This could break out in the short term. Stop loss at 58.20, target price of 6,000. Second is a buy on Container Corp, which has reversed from the same support levels of 820, 830. Stop loss at 830, target price of 860.
What's on your BTST list?
So I'll go with one of the cash stocks. That's a buy on Tega Industries. That's a stock which is looking ripe for a breakout, a double bottom on the charts at 1120 levels. So would suggest a buy with target of 1200, stop us at 1110. And ABFRL is something which has come back into a breakout mode, a classic double bottom at play, a strong bullish engulfing pattern on the daily charts, engulfing almost last 1 week, 10 days of price activity. So would suggest a buy with a target of 255, stop us at 230.
Okay, since metals is the one where all the focus is and all the gains are, let's hope Tata Steel's numbers are okay, because they're all set to report their numbers. What's the street penciling in? Let me take it across to Ashesha and find out what the ET Now poll is looking like. Ashesha?
Well, yes, for Tata Steel this time, India operations are expected to report very strong set of numbers. But as far as European operations are concerned, we are expecting EBITDA per ton loss for the 5th consecutive quarter this time. Consolidated revenues could come in at about 56,850 odd crores, up about 2% on a sequential basis, while margins too are expected to expand. They could come in at 8.5% versus 7.7% that the company had reported in the previous quarter. As I mentioned, India operations are expected to remain very strong, where realizations could inch up by about 1 to 2% on a sequential basis. EBITDA per ton could also rise by about 5%. This is on account of higher volumes and higher realizations, partially offset by higher coking coal costs in the quarter gone by. European operations, over here we are expecting EBITDA per ton loss of about $190 per ton versus $168 per ton loss that the company had reported in the previous quarter. Management commentary on European operations, especially UK, will be very crucial. Management commentary on capex and debt will also be keenly awaited.
Yes, debt as well as the UK business is something to watch out for as well as Tata Steel is concerned. In terms of the other buzzers right now, South Indian Bank is up around 14%, Mishra Dhatu Nigam is up 12%, Hudco, KEI, which is a result reaction, is also seeing quite a bit of traction. Nuresh, any individual stock that is coming up on your radar, because there has been a sizable reversal in the market itself. Has anything changed for you?
So a lot of large cap names have shown good traction. If you look at it in terms of momentum, we've seen a good recovery in Reliance Industries itself from 2600, 2650. Dr. Reddy's is close to a breakout, very close to the new 52-week highs for Dr. Reddy. One interesting observation is the fact that we saw a huge volume block happen early in the morning in HDFC Bank and made a bottom, and we've recovered from that 1380 to 1450 levels. We are seeing a similar block happen. A large 1 to 1.5 crore shares got traded at 998 for ICICI Bank, which looks like a place where from we could see a bounce back in ICICI Bank as well. So overall bias is positive. Now we watch out for 21,600, 700. If that crosses, then we get into further momentum on the Nifty.
Okay, point taken. Let me take it back to Sesha to get a sense as to what JSW Steel expectations are. Sesha?
Well, yes, we are expecting muted set of numbers from JSW Steel this time on a sequential basis. Lower volumes, higher cost of production and muted realization growth is why we are expecting muted set of numbers. Consolidated revenues could come in at about 42,500 odd crores, down 5% on a sequential basis, and margins too are expected to contract. They could come in at 15.6% versus 7.7% that the company had reported in the previous quarter. As far as realization are concerned, remember steel prices were increasing till October end, after which they started falling, and hence some impact of price increase will flow through in this quarter, and hence realizations could inch higher by about 1% on a sequentially. But EBITDA per ton, that is expected to see a big knock this time of about 10 to 12% on a sequential basis, and this is on account of high cost of production and negative operating leverage. Remember, both iron ore and coking coal prices rose sequentially, and hence cost of production is expected to be on the higher side. As far as management commentary is concerned, commentary on capex, commentary on production and sales guidance for this full year and next full year will also be crucial. But all in all, we are expecting weak set of numbers. Higher cost of production, lower volumes are expected to impact performance.
Okay, that's JSW Steel as well as Tata Steel, impending results there. But Pawan, want to specifically talk about the carnage that played out in the railway names, in the power stocks yesterday. Today, of course, some of these names, the financiers like a PFC, REC, of course, are jumping up in trade. But would you say it's getting a little frothy and they've seen a parabolic move? Maybe best to take profits here?
No, I think as far as power sector is concerned, we are into a big secular cycle now. We haven't invested into power sector for quite many years. The sector is still plagued with a lot of issues. While the government is very clear they want to resolve a lot of these issues, but the fact is that we haven't invested much into power, and the demand is only increasing. We are almost reaching back to peak deficit levels. So from here on, I think, power sector, both in terms of generation, transmission, distribution, financial, ancillary sectors, all of them, I think for the next 4 or 5 years at least, we have a very good run up in terms of earnings is concerned. If you look with that in perspective, I think as far as stocks are concerned, it's a mixed bag. Some of the stocks, like without naming any stocks, I think some of the utilities are way too expensive. I think they are pricing in more than the growth that they can potentially do. But on the other hand, if you were to look at these power financiers, REC declared their numbers yesterday. I think considering the growth outlook and considering the return ratios, and most importantly, all of this growth will come at very, very, very low credit cost, low NPS. Valuations in that sense are not so very expensive. I would not say that it's cheap and one should just lap into that stock, but it's not expensive at all. And one thing I think, not only in terms of power and railways, across the board, you would see that valuation per se is across the sector has moved up quite a bit. So in every sector which is going through a growth phase, you need to cherry pick stocks, and that's very important. And I think that's the case with power sector also. As far as railways is concerned, I think that is space which we clearly feel it's very frothy. Stocks have significantly gone ahead of the potential earnings that they can deliver, and I think across the board, the entire sector is, I think, significantly overvalued.
Railways is one space that looks significantly overvalued, but take a look at the index right now. At the highest point of the trading session, very close to that 21,500 mark. And the credit actually goes to Reliance Industries because that stock is higher by 1.5%. So that's adding almost 35 points to the Nifty weight. Look at the spike in the last few minutes. HDFC Bank is also doing its bit, almost a 2% gain coming in on that. Infosys as well sitting with a gain of around 2%. Bharti Airtel at all-time high levels at 1190. But ICICI Bank seems to have again gone into the three-digit category. It's sub the 1,000 rupee mark right now, so seeing quite a bit of pressure. And this is despite reporting one of the best numbers from the banking space. Yesterday, the stock was high in the trading session. There was no complaints in the numbers whatsoever. A lot of the analysts increased their estimates, called it the top pick amongst the sector. But no, today nobody is buying that view. We have that decline coming in. And of course, Axis Bank, etc. are down and out in the trading session. From the frontline index itself, Kunal, what really catches your attention? And is it fair to say that the poison is out of the system now and we are likely to trend, higher rather than lower, or not a very convincing move today?
See, I think what could happen in the next couple of days, because tomorrow is expiry, is that traders would want to now juggle with their positions, because major part of the risk after yesterday's sell-off seems to be now behind. Now, what matters is that which are the sectors, which are the kind of stocks traders are bullish on, and they would want to carry forward for the next series. Of course, with budget also being one of the key events lined up. So I think that's how the positioning should be over the next couple of days. So I think what we could probably be seeing over the next maybe 1 or 2 days is more of adjustments towards portfolios rather than directions being taken or directional calls being taken out. We will have to see out the patterns in terms of the trends on open interest to try and figure out that whether we are looking at a very strong recovery for these banking names, the private sector banking stocks, or just maybe a rally after being extremely oversold in terms of indicators. So maybe 2-3 days of data I think could probably help substantiate the view. As of now, I would just look out for more of stock specific buying, wherever there is a breakout or any kind of a turnaround as such in terms of these stocks coming back from their 50-day moving averages, and stocks which have not broken below their 200-day moving averages. Those are the kind of strength stocks which I would look to trade.
Well, what about HDFC Bank, considering that was the sort of one core point which actually led to the decline in the rest of the banking pack? Is that now coming into a value buy zone? Because, like you were alluding to yesterday, earlier today, that it's pretty close to its 2022 lows, right?
Yeah, it's very close to the 2022 lows. But the concern is, Aisha, that there's been an 80% jump in the open interest for HDFC Bank. So you look at the last 7 days of data, the stock was almost at 1,700 rupees. From there, it fell to sub 1,400. And in the last 5-7 days, there has been a 70 to 80% jump in the open interest, and this clearly indicates skew towards shorting of HDFC Bank, and that clubbed with the delivery-based data where there has been delivery-based selling into the stock price. Now, just a 30-point up move after a 300-point kind of a correction may not be some total analysis that these stocks have bottomed out. We would need to see a change of stance that option writers, option traders, or the F&O traders, they've changed their stance from being extreme short into these stocks and covering up their positions. If we see the data in the next couple of days, then we can probably establish a very concrete view that these stocks are bottomed out.
Okay, that's the take coming in on HDFC Bank specifically. But Pawan, Kunal, Naresh, thank all of you for taking the time out and joining us on the show. By the way, look out for Reliance Industries. There's a huge spike on that particular stock. As we wind down, we're closing in at the session highs. Let me hand it over to Vinny, find out what are the other buzzers in trade.
Absolutely, I think Reliance is surely pulling up the Nifty today because, yes, closing at the day's highest point, that's the Nifty, 21,478 levels. So surely a very good recovery that we're seeing coming in for the Nifty. Let's pull up an HDFC Bank as well and see, because that's an heavyweight as well. And where is that headed? That was one of the drags that came in on the Nifty yesterday. Today, holding on to good gains over there as well. So two heavyweights holding on to very strong gains on this front, and that is why HDFC Reliance among the top Nifty gainers when you're seeing there as well. Other than that, in terms of the gainers that we're seeing this afternoon at close is Hindalco, Tata Steel, all these buzzing in trade. Metal names, surely a pack that has been buzzing today as well. Nifty Metal among the top sectoral gainer today. Tata Steel ahead of its numbers, strong gains of 4% as well. JSW Steel, keep an eye on that one. We'll be reporting its numbers tomorrow as well. So yes, that's the focus area we're keeping an eye out on. Other than that, all the sectors today, most of them were trading in the green as well. We've seen Nifty Realty, a bit of a subduedness on that front. Maybe some bit of a profit booking, you could say, that came in for Nifty Realty after the run-up that we've seen there. But yes, that's managing to close in the green as well. IOB, Indus Towers, Rama Steel, MOSL, all these stocks were buzzing in trade today as well on the back of a good set of numbers that came in Q3. Other than that, let's also keep an eye out on Sharda Cropchem that reported its numbers during the day, and a bit of subduedness that came in on that front as well. Mid cap, small cap, surely doing quite well in trade, holding on to strong gains, and that's how the market setup looked like. A sharp recovery that we saw coming in the market the second half of the day. So that's how the market looked like. But yes, with that, let's wind down this edition of Closing Trades. It's a goodbye from Team ET now.